Good afternoon, everybody. It's Maynard back with Tuesday Close of Business. I'm joined by our usual crew, Colin Fenton, Mike Bradley, and Matt Portillo. We have something exceptional for you today. We've got Pedro Palma, David Voght, and Luis Pacheco. Today we're discussing Venezuela, and this is a global conversation. Pedro is in Caracas, David is in Spain, and Luis is in Bogota. Joe Amador, who heads up TPH's Latin America group, will be joining to help us lead this esteemed group of guests to talk about Venezuela. Before we jump in, guys, Mike Bradley, oil is up today. What'd you do? Nice work.
No, I think what's going on today is that you've had a bunch of announcements on European stimulus. You have the U.S. talking about anywhere from $1 to $3 trillion in an additional stimulus. I think people are starting to sense that the coronavirus wave will start peaking a couple weeks out. And I think, some traders have been sitting on the sidelines and now are saying, maybe we start to dabble into it. And you start to see some vaccine hopes are kind of coming out a little sooner than most people would have expected. As it relates to crude specifically, I think you're going to see DOE numbers come out tomorrow. You're going to see another draw in crude oil inventory. So that's just helping the cause. And so as it relates to what's going on with the equities, I think the equities, I think there's just people are very underweight, sentiment's poor, Q2 earnings are expected to be terrible. And what you've seen so far is Halliburton came out, had a pretty decent quarter, a lot of cost cutting, put a little bit of life into that. And in fact, the the OIH, which is the OFS stocks today are up 8 to 9% on massive volume. So it does look like, sentiment is very poor there. It's starting to improve. And one of the other things that we're seeing today is like tech for the first time is underperforming. Energy is outperforming. So a little bit too soon to say there's a little bit of a gravitation or pull away from those stocks, out of momentum stocks into value. But, setup looks pretty good right now from our standpoint. I mean, crude oil to us looks like very well supported.
So, Mike, oil is knocking on the door. WTI is knocking on the door at 42. Where could it get to by Labor Day in your upside case?
Yeah, that's an important point too, Maynard. If you look at crude oil from a technical standpoint, broke through the March 6 levels. If you remember, March 6 is when Saudi decided to go, open the taps, and crude oil basically, went down. And today was the first time we're above $42 in WTI. It's the first time we closed above that March 6th, close. And so I think the technicals are adding to this. I mean, so what do I think? Look, I think it really depends on demand. I think people are starting to get a little bit more, demand is going sideways. I think second half, if you get vaccine, if you get these, these stimulus plans, I think there's room for demand to improve from here. So until we see that, we're probably not going to see crude oil go that dramatically higher. That said, I do think supply and demand is going to be underbalanced in the second half of the year. To the tune of anywhere from 2 to 5 million barrels, depending on what demand looks like. And you're going to have that draining inventory. So easily I see WTI probably 45, and I can see it pushing 50 by year end.
So, Mike, if I'm trying to pin you down here, I'm like Sam Donaldson in the 80s. If COVID stats go sideways, but demand moderately improves between now and Labor Day, what do you think happens in oil?
I think traders feel pretty good about supply. I don't think they feel that good about demand. They were feeling good about demand 2 to 3, 4 weeks ago, and there's been a pause in demand. We've gone sideways. I do think if we can say, for sure that demand is going to be up in the next 3, 4, 5, 6 weeks, the next couple months, I think crude oil is going to go higher.
So let me jump to Colin, because you've been watching oil and watching some other things. In fact, we think you've got a new Christmas song. It's called Silver, Gold, and Bitcoin. Wrap all that together for us, Colin. Tell us what you're thinking.
Yeah, for sure. It's Christmas in July. If you look at silver, it's up 7% today, and it's above $21.40. In fact, it reached $20 for the first time in years yesterday. And recall back to May, this was something we've been expecting to see, precious metals and Bitcoin picking up that inflationary aspect from all of the stimulus, including the stimulus that Mike just mentioned, to give us asset price inflation, if not consumer price inflation. If you take a look at this chart, you can really see just how far we've moved in the prompt COMEX silver futures price from $11.74 on March 18th to $21.40 today. Perhaps more important and less visible is the correlation with NYMEX WTI crude oil. And so on the right panel in this chart, you can see a month ago, the correlation between prompt TI and prompt silver was minus 0.26. It's now at 0.34. In gold, it went from minus 0.37 to plus 0.3. And in Bitcoin, we're up to a 60% correlation basically with WTI. And to be clear, what's happening here is the monetary inflation is pulling oil, not the other way around. And when we look at the history back to 2014, it suggests that there's probably even still more upside in these correlations.
So why, when you take a step back, Colin, you're a chart, technical, fundamental, you're all flavors in one. Why would silver go up 7% in one day?
You know, I've been waiting years to see silver go up, and it's not so much that it went up today, it's that it took this long to get here. I would have expected that we would have seen that movement be a little bit more coincidental with the movement in Bitcoin and gold. So it's playing a little bit of catch up. It tends to have a higher beta than gold to underlying factor economics, if you think of it that way. So it's a higher beta instrument. I took a look at the Robin tracker to see if our friends in the Robinhood universe have been buying the S.O.B ETF. And as of today, it's number 387 on the leaderboard. So this does not look like retail investors. This looks like macro hedge funds who really know what they're doing and really understand why you would see this beta appear around this time.
And what's the role of the dollar in all this?
So it's a simple story, and we've talked about it before. If you inflate the money supply by as much as we've seen, not just in the United States, but worldwide, you're going to begin to have excess dollars, excess euros, and you're going to basically depress their value relative to some reference price. That can be hard to see sometimes, especially if everybody's doing it. But we first saw the anti-dollar play in Bitcoin, and now we're starting to see it in the precious metals too.
Are you surprised in some ways, guys, that oil hasn't gone up more given the way everything else is going up? I know that's kind of an outrageous question, but what do you think?
You know, it's tough because you're still on the cost curve, not yet to the margin as we think of it, right? And so you need to press closer to the deficit market that we were just talking about before you can really start to trigger those marginal cost economics. Otherwise, you're still pricing, you know, that part of the cost curve that's more land-based as opposed to deep water and so on.
Okay, Matt Portillo, let's wrap up the entry discussion with you. I know what you want to talk about, but let me let you take it away.
Yeah, Maynard, it's been a pretty interesting start to the week. We saw a fairly significant transaction on Monday with an integrated buying out an independent. And that has really kind of re-sparked investor interest around mergers as it relates to the upstream space, but also the broader energy complex as a whole. And I think from a client conversation perspective, rewinding all the way back to 2018, investors have really been pushing for industry consolidation. I think this is coming from a bunch of different angles. First of all, there is a limited amount of market cap left in a lot of the smaller companies, and it really is prohibitive of investors taking positions in those names as you look at equities below $5 billion in market cap, and quite frankly, that number's probably moved closer to $10 billion in market cap. Secondly, as the industry has matured, I think the aerial extent of the basins as well as the core inventory depth has become fairly well defined, and clients that we talk to are really looking for only 1 to 2 in-basin champions to really kind of drive their equity position in the sector as a whole. And then 3, I think we're seeing a pretty significant divergence in the cost of capital. So for your smaller producers or your companies with higher leverage, the cost of capital is rising fairly significantly. And for those with better balance sheets or generally with larger market caps and more scale, we're seeing a cost of capital advantage that ultimately is going to filter through over the next few years in an improved cash flow stream. And then lastly, I think just industry consolidation potentially drives pretty significant cost out of the system as it relates to G&A expense, and specifically to the upstream sector. In any particular year, 15 to 20% of the corporate cash flow may actually be going to corporate overhead. And there's a pretty big divergence between the higher cost producers and the lower cost producers. And so I think clients are looking for industry participants to merge and use that as an opportunity to skinny down operations in order to drive best-in-class capital efficiency.
Matt, if we did everything imaginable over the next 2 years, we cut G&A, we improved technology, we had more efficient drilling, you pick any flavor you want and we achieved it all. Where do your investors or you personally think we could drive break-evens to in, still high quality North American shale?
Yeah, that's a great question, and something actually we recently dug into on a research report where we effectively looked at a maintenance scenario through 2025 for our upstream coverage universe. And in that world, what you're going to see is moderated base declines, very little cost inflation, the potential to continue to skinny down operations. And generally, we're seeing within cash flow maintenance CapEx essentially achievable at $30 to $35 a barrel. That compares to a maintenance capital number, which is essentially holding production flat exit to exit in 2021, closer to $40 to $45 a barrel. So I think there's about $5 to $10 a barrel that you can essentially squeeze out of the cost curve. And ultimately, what I think investors are looking for is a low growth to no growth scenario over the next 3 to 4 years, and increasing that free cash flow profile to accelerate shareholder returns or to reduce debt loads for the industry as a whole in order to put the business in a much healthier position.
So one question for all you guys, it's probably a Matt question. I keep hearing energy volumes, stock volumes are really low, just any given stock, really low volumes. Is this pre-earnings hesitation, or is this, what is the explanation for the lack of volume, if I'm right on that?
You're seeing a lot of grossing down of books, and the reason why is just there's been a lot of volatility. A lot of people haven't made money, specifically hedge funds, and I think generalists generally, when you have the energy as a percent of the S&P where it's at, they're really not taking any bets. So a lot of grossing down into Q2 earnings because of a lot of uncertainty, and what we're seeing today is, like I said, on the OFS stocks, is very big volume here, and the reason why there's very big volume is because that's been one of the more shorted sectors, subsectors in energy at this point in time.
So Colin, let me ask a last question of you, and then we'll jump into our main attraction, which is Venezuela. Are we going to have a day in the next month or two where you're saying, wow, kind of like the silver thing, wow, look at oil today, and it has everything to do with all this money's just got to find a home, and now it's decided it's going into oil. Are we going to see that?
Yeah, I think it's a real possibility. I'm still nervous about the August to November timeframe for things that could go wrong, and it's not even big things go wrong. Some small things could go wrong, and it could be outsized to the downside. But one statistic that I really kind of keyed in on today is if you look at the one-day return for the S&P 500, the top 10 performers today are all energy companies.
Mark that in your diaries. Okay, I want to now thank you guys. I want to turn to Joe Amador. As I mentioned, Joe runs our Latin American investment banking business, and so has just been a fantastic resource for us over many years now. And Joe helped us pull together this great panel of Pedro, Luis, and David. So Joe, let me turn it over to you to do a proper introduction of our team.
Thanks, Maynard. Very happy to be featuring Venezuela in our Close of Business Tuesday series, a country that I think most of you still remember as being a major powerhouse in the oil and gas world. Was the world's largest exporter of crude for many years, had the world's largest refinery complex for many years, but really has been suffering here over the last 20 years, and particularly over the last 5 years. But I think we have a very well qualified panel here to discuss the current situation, the outlook. Pedro Palma founded Metroeconomia in 1977. He's been following Venezuela's economy and its ups and downs since then. He's currently director of Ecoanalítica and our man on the ground, if you wish, in Caracas. David Voght, managing director of IPD Latin America, a company he founded probably in the year 2000 or thereabouts, and has been following Venezuela and writing reports on Venezuela risk and surface issues since then. And Luis Pacheco, currently chairman of the PDVSA Ad-Hoc board of directors and a non-resident fellow at the Center for Energy Studies at Rice University. He will be joining us from Bogota, Colombia.
Well, Joe, you did a great job finding three stars. Pedro, I think we're going to start with you. This is the miracles of Zoom. You're joining from Caracas, and it looks like you're in my living room. What would you tell us, Pedro? We knew conditions on the ground in Venezuela were very difficult pre-COVID. Now they're difficult in so many places because of COVID. What is it like there, and how are the people doing?
I would say that the Venezuelan economy at this moment is in a collapse situation. For about 5 years or 6 years, the GDP is contracting. The additional or accumulated contraction of GDP from 2014 up to 2019 is about 70%. That means that we are now producing about 30% of what we produced in 2013. Of course, that has lots of things, has a high relation with the behavior of the oil situation. The oil price, as you know, collapsed in 2014. And in addition to that, oil production in Venezuela has collapsed dramatically, as David will tell you. In this graph, you can see here that the big contraction in GDP is incredible. And even in 2014, when oil prices still in the first semester was above around $100 per barrel, the economy was contracting. And as you can imagine, the contraction is worse and worse. And in 2019, the contraction was about 39%. We are expecting for this year another contraction of about 29%, making accumulated contraction at the end of this year to be close to 78%. 78% contraction in 6 years. Well, this economy is almost disappearing. And one of the richest economy in Latin America, the fourth Latin American economy now, we are probably below or at the same level of Haiti, or one of the poorest countries in Latin America. One of the reasons of that big collapse is what happened in the oil industry, as David will refer that. We passed from about 3 million barrels a day of production down to 400,000 at this moment. And that is, of course, the sanctions, the US sanctions has a role to play in this contraction, but it's not true that all that is because of the sanctions. That contraction started in 2013, and from that day on, contraction has continued, and the oil sanctions imposed by the U.S. were imposed in January 2019, and at that moment, the oil industry was almost disappearing. The main reason for that is that PDVSA was sacked by the Chavez government and by Maduro. Chavez just not only fired 18,000 technical people in 1903, but also forced PDVSA to finance all public social programs, put PDVSA to pay the Chinese debt without receiving one penny from that, forced PDVSA to transfer $60 or $70 billion in 10-year period to a fund handled by Chavez just to finance public spending. And, there is no oil industry in the world that can resist that type of attack in the past.
What are conditions on the ground now for you, Pedro?
Well, at this moment, the situation is really bad. The COVID is just, making things worse. Inflation is still very, very high. It's not as high as in the previous times, but now we are talking about a 20% per month inflation in the country, making people, to be dramatically affected. The purchasing power of revenues of Venezuelans are almost disappearing. By the C.O.B poll recently released, 96% of Venezuelans are poor, and 72% are extremely poor. That means that 72% of the population is not able to buy the food basket, the basic food basket. Is something absolutely dramatic. And, answering your question, Malon, there is no possibilities of this economy to improve. We are expecting for this year, again, a 29% additional contraction, and probably for next year, a small contraction can still be done. Inflation is more moderate or is less dramatic than before because the government has cut expenditure, because the government cut public banking loans, and now the required reserves of the banks are in the 80% at this moment. So there is no credit, there is no possibilities of getting a loan from the banks, and that is contributing also to this big paralyzation of the economy.
So one question, Pedro, it seems like, I'll get my time frame wrong, but about a year ago, it seemed like Maduro was under so much pressure and we might get change. And now it seems like, and this could be the wrong impression, it seems like the pressure is even more, but yet we're not hearing about the possibility of getting a change. It doesn't seem, the country, it seems more unstable, but at the same time, we're not talking about the possibility of a change as much as we were. How would you explain that?
I always say that communist revolutions tends to create misery because misery creates dependency from the state and a total subordination of the government. And that's exactly what this revolution is doing, creating misery in order to tell Venezuelans, if you want to eat, you have to be with the government. Well, the big question is for how long that can be sustained. But up to now, that's working for the government. The army forces, which are deeply corrupted, they are in narco traffic and involvement and so on, are still with the government. It seems that the armed forces are strong with the government. And all those, dreams that the U.S. would invade Venezuela or that other Latin American countries would help us to expel Maduro, now are very soft. And now probably the government is learning that in spite of big sanctions coming from the states that are, just making lots of negative effects, not only on the government, but in the population. The population is suffering by these sanctions. But the fact is that the sanctions do not overthrow governments. And the government now knows that. And they know that they have no place to go. So they have to stay here. And that's what we are living. Now, is this sustainable forever? I doubt it. But I don't see any reason to be optimistic that in the short term, we're going to see a change in the government.
So are you able to, this is a more basic question, are you able to go out in Caracas? How do you can you go to the supermarket? Do you find food? Like just how, with COVID and with all the strains that exist in the economy, how is it living there?
COVID is forcing us to stay home. Particularly for people like me, mature people, we better take care of ourselves. But the supply of goods and services basically supply of food and other goods in the markets are much better now. About 2 years ago, it was terrible. Scarcity was incredible. Well, now the government, being the case that they are not receiving dollars coming from oil exports, they forced, to say, well, there is no more preferential dollars, and they released the exchange controls. Now, private sector is almost free to import and almost free to import at free prices and so on. And now that has improved the supply of goods in the markets and so on. Now, when you go to the markets in Caracas, basically in Caracas, that's a big difference to be made. In Caracas, you can find almost everything. Internally or in other parts of the country, the situation is by far worse than in Caracas. But, that's what we live here. If you ask me, how secure do I feel in Venezuela? I don't feel secure, but, this is my country. Up to now, I have been respected in spite of my critical position against the government. But the government up to now hasn't molested me. I hope that in the future that will continue. But the political pressure coming from the government is there. There are lots of political prisoners, people in jail, and so on. And things are getting worse and worse.
No, thanks for that. Thanks for that, Pedro. That was a good. I think it was a great overview on what's happening there. David, I thought maybe we could spend a few minutes talking about the situation of the oil and gas business in Venezuela. What can you tell us about what's happening there?
I think that it's worthwhile putting things into perspective. We have a lot of people talking about the decline of production due to sanctions, but there are structural issues that have been sort of in decline over a long period of time. So to put things in perspective, let's just start a little bit with some history. Oil production has fallen. If you take a look at our first graph there, our timeline begins in 2008, and oil production has fallen from its height in 2008 of 3.3 million barrels a day to an average of 421,000 barrels a day last month. For 12 years now, there's been a good deal of structural damage to the industry. PDVSA's budget has fallen victim to both price volatility and increased politicization of the company's management. Following the 2008-2009 price crash, and PDVSA cut spending to the point where it permanently lost 500,000 barrels of production capacity. Then, despite the high oil prices for the next 4 years, production remained flat at about 2.8 to 2.9 million barrels a day. So there, what we saw very clearly is the state's fiscal veracity was very intense and didn't allow the industry to grow. PDVSA then slashed its budget again right about the time of the next price collapse in Q4 of 2014. And this really started this sort of multi-year domino effect that got us to where we are today. By 2016, disinvestment had really taken its toll on field service providers. At the beginning of 2016, Venezuela had about 70 active drilling rigs, and you can see in the gray bars on our slide, rig count. In 2017, that count went below 50. In 2018, it went below 30. And in 2019, it was consistently in the low 20s. Today, we're at 0. Over the last year and a half, power outages have impacted crude output across the country. In March and July, output fell from 1.6 million barrels a day to 460,000 barrels a day, literally overnight, due to a transmission line failure. Poor maintenance of gas injection facilities in eastern Venezuela have contributed to production curtailments in that region. When we factor in human capital flight, HSE challenges, the inability, even something as simple as getting workers to the fields because vehicles don't have parts or lack of gasoline. When we look at the lack of payment to joint venture partners, we see a situation that is really not easily reversible. And all this was before COVID-19. So when we take a look at what's happened with oil price, when we take a look at what's going on with quarantines, today, for example, we estimate that roughly 20% of PDVSA's workforce is actually able to get to work. Of course, sanctions have played a role as well. The U.S. sanction regime began in March of 2015, but the first impactful sanctions for the industry, I think that was Executive Order 13808, which is August of 2017, That prevented PDVSA from obtaining new financing. Then in January, there were additional sanctions. This included adding PDVSA to the specially designated nationals and block persons list. The main thing that this executive order did was to prohibit the purchase of and import of crude and petroleum products from PDVSA. That shook the industry, and it was sort of a wake-up call for investors that they needed to start taking very seriously the U.S. policy on Venezuela and sanctions. In August, another executive order was issued. This one was important because up until this executive order 13884 was issued, all sanctions clearly targeted only U.S. persons. But 13884 opened up the door to interpretation around broader applicability, and immediately became the most important sanctions bottleneck. That's because the tanker market began to react at that time. And that caught PDVSA off guard. Storage at PDVSA's terminals filled up quickly, forcing the company to shut in production, and output fell to 600,000 barrels a day a month later. And this is where we try not to underestimate PDVSA. In an attempt to drain storage, the company prepared a pretty aggressive 900,000 barrel a day loading plan for October of 2019. And it nearly achieved its goal, loading about 8,000 barrels a day that month. Newly available storage capacity allowed PDVSA and its joint venture partners to resume production, and inventories were cleared mostly from Rosneft. Rosneft found tankers that were willing to transport Venezuelan crude and evacuated the vast majority of the crude that month. So October data delivered a surprise for us. We estimate that production, because they were able to get the crude out, increased from 620,000 barrels a day on October 1st to 934,000 barrels a day on October 31st. Of course, then the U.S. sanctioned Rosneft trading and TNK trading. This caused a temporary collapse in oil exports until some new unknown traders stepped in. These were mostly Mexican traders that were, and a couple of them were doing oil for food deals. But the U.S. immediately put pressure on these traders and started to, at the same time, turn up the heat on the shipping industry. And that has been incredibly effective. The unknowns disappeared from the market very quickly. And exports are now limited, at least where we have really good information from the Jose terminal, which is about 80% represents about 80% of Venezuelan exports. We see June exports at just over 240,000 barrels a day. Companies like Repsol, ENI, and Reliance, who have been communicating with OFAC, continue to lift crude in compliance with sanctions so far.
Are U.S. sanctions, would you say they're achieving what was their original intent? In some ways, they just seem to be making a bad situation worse and not really getting us closer to something better. I don't know. I'm just listening. What do you think?
We see sanctions all over the world, and they have limited effect. In Venezuela, what the sanctions have tried to accomplish is to limit cash flow to the Maduro regime. And in that regard, I would say that they have succeeded. Maduro is besides the fact that exports are falling dramatically, Maduro really doesn't have access to much of this cash at all. So in that regard, they're succeeding in pushing for a political change. Maduro still has access to other sources of revenue, gold mining, other illicit sources as well, and seems to be using those funds to continue to prop up his regime.
Luis, we should pull you in here just to talk a little bit about, as Joe mentioned in his intro, you're on the Ad-Hoc board. Citgo, and you have a lot of visibility into all this. What is your take on things? Is there a chance that this gets better anytime soon?
Let me tell you, I'm very depressed after listening to Pedro and David. Very, very depressed. But countries do not die. They never die. And my responsibility is trying to look over the rubble that they are describing and trying to see how to move forward. As you know, or your audience should know, the PDVSA Ad-Hoc board is a board appointed by the Guaidó administration to take care of the assets overseas from Venezuela, mainly in the United States and Europe, and also to have a look at how to go forward with a new look at the oil industry. It is true. I mean, I cannot contradict Pedro or anything. I mean, after all, he not only lives there, but he's one of the cleverest economists that there is in the country. And David has his hand in the pulse of the industry. But one needs to go and look beyond that and see that what you have in Venezuela is a mature oil basin, an oil province that, as Joe says at the beginning, was one of the main exporters of oil, and that any recovery of the industry, or any recovery of the country, that is, passes by two steps. The first one is there has to be political change. As David has described, if there is no political change, or at least changes in the policies, that the oil industry will not recover. And if the oil industry does not recover, the economy as a whole, as Pedro said, will not recover. We believe that there is light at the end of the tunnel. We believe that the tunnel should be very short after there is a political change, because as opposed to being a greenfield construction of oil production, Venezuela, if I may coin a phrase, is a brownfield. So the recovery should be quicker and with less cost than competition. Because one needs to understand not only that Venezuela has lost oil capacity and refinery capacity, but it has also lost markets. And the Russians, the Saudis, even the shale oil producers are people who look at Venezuela as a potential competitor, and one needs to be prepared for that in the future. But as I said, we believe, and we have in our hands plans to do that as we move forward. But that has to go through, as I said, through political change.
So, Luis, maybe I could just get you to pause on the Ad Hoc board of PDVSA. Just a lot of our viewers may not be familiar with what exactly that is. Could you just explain that so that everyone understands it?
Yeah, well, yeah. How much time do we have? The Ad Hoc board of PDVSA is a board, is a set of 9 people that function as a board of an ad hoc board, but we don't have control of assets or operations in Venezuela. So our main concern is to safeguard the assets of PDVSA overseas. Why is that important? Because of all the judicial demands and debts that PDVSA and the Republic have, the Guaidó administration felt the need to safeguard those assets so that they could be used in the future as a stepping stone to a recovery. So our main concern as the Ad Hoc board is to safeguard and recover those assets. The main one, of course, being the Citgo group of refineries in the U.S.
And any comment, what would you tell us about what's happening at Citgo?
Well, Citgo, as the 5th refinery in the United States, is an ongoing operation. It is professionally managed. It has a new board of directors that have basically done 3 three things in the last 18 months. That's financial stability, operational stability, and recovery corporate governance. Today it is processing around 750,000 barrels of oil a day. And of course, it's going through the same problems that all the refinery sector is going through in the United States. But it has a robust balance sheet, and I think it will be ready when the time comes to help in the recovery. At the same time, Citgo is the target of a number of litigations. The so-called litigation of Crystalex, where a Canadian company is wanting to sell Citgo or Citgo shares to pay themselves a debt, and also the so-called PDVSA 2020s, which is the bonds that are the only secured debt that PDVSA has, which is nowadays is in litigation in the New York courts.
One question, and this may be for Colin and Mike and Matt, but really anyone. I think part of the purpose of this was we haven't been talking about Venezuela as much as we have been previously. We wanted to check in on it, but it makes you realize there are many places around the world we're not talking about, and because we're, at least the United States, focused on our own issues. But Colin, I'll ask you, as you listen to this, doesn't this make you think we, at least in the U.S., don't understand not only the problems in Venezuela, but Nigeria, parts of Russia, all kind of parts of the world? And when you think about oil production and the economy, what this could mean for the world, what are some of your reactions to all this?
Yeah, I think that's right. I mean, we look at this every single day, and I feel like we're still flying blind half the time. It's such a complex market. It's a global market. And we didn't even talk about the cross-linkages between two sanctioned countries, Iran and Venezuela, and the trade they have with each other. So, we're just very respectful of our ignorance and just trying very hard to frame questions in a smart way and, get answers from esteemed experts such as yourselves. And, one thing that I've been thinking about is, as I've listened to the conversation, we talked about Venezuela's gold mining. Obviously, Latin America more broadly is a major producer of silver and gold. And I said at the beginning why I think that's important. My question for the panel would be, what are your thoughts on the foreign exchange reserves in Venezuela? Because by our calculations based off of the central bank's data, we're down to about 6.37, 6.39 billion. And we keep on hearing these anecdotal stories about the Maduro government's attempts to monetize some of the gold holdings. And I'd just be curious what you all think about that.
International reserves are in the $6.3 billion level, but the cash reserves are almost gone. The cash reserves are below $1 billion. That's one first point. The second point, the reserves in the IMF, by SDRs or by the quota and so on, has declined substantially. Mainly the SDRs are almost gone. So we don't have, that reserve to take care. The central bank is selling lots of gold up to the end of last year, the end of 2019. The central bank has sold, if I recall well, 28 tons of gold through Turkey, Russia, and some African countries, mainly in order to get some cash that they desperately need. But those things are limited. The international reserves are very limited. Nevertheless, the government is exploiting, very badly the what they call the mineral arch in Guyana, in the Guyana area, taking out some gold and selling those golds, through informal channels, and they are getting some dollars, some cash coming from those countries, mainly Turkey is playing a big role in that.
As you guys listen to this, and Joe, you should jump in here too, is the Maduro regime here in 6 months? Because this sounds like so much pressure. How do you withstand all this? Is that a fair question? Joe, let me start with you.
Those regimes have a way of just lasting and hanging on and using different tactics. A small island nation, which will remain nameless, has outlasted many U.S. administrations. Is still there. So, although the population suffers, they just continue to hang on.
David, what do you think? Are we going to see change?
I'd like to think so. I think that Maduro is going to be there as long as the military wants him there. We saw last year in April some indications that there might be some internal split within the military. Any divide there appears to have been closed up pretty quickly. So timing is complicated. But his money is running out. When we talk about the Iranian support with gasoline, every indication we have suggests that Venezuela is paying for that gasoline. And one of the questions that we have is, how long can Venezuela keep paying for that gasoline? I think that without gasoline in the country, where refineries are producing intermittently 20 or 30,000 barrels a day, with demand at least, and this would be sort of extra COVID demand of 140,000 barrels a day. I see a real potential for collapse that could move towards political resolution. But no, Maduro is tenacious, and he's still got the support of the military, which is really key.
Luis, you're in Bogota today. I know a lot of Venezuelans have moved to Colombia. What would you tell us about Colombia, just since you're there? Is this spreading beyond Venezuela, a lot of these very difficult problems?
Okay, I want to tell you first that we spend every waking hour preparing for the change. So I need to be positive. I mean,
yes, we need that. Thank you.
Like they taught me in Shell when I was doing planning. Don't bother me with reality. I'm doing planning. So that's what I'm trying to do. Colombia is, I wouldn't say suffer, but it's been the destiny to which a lot of Venezuelan migration has come for two main reasons. First, there is a very permeable border that you can cross on foot. And there is always been this natural relationship between the two countries, where a lot of the people who are migrating to Colombia, not all, but a lot of them are of Colombian descent, because they're at the time of violence in Colombia, a lot of Colombians went to work in Venezuela. I think Colombia made a huge effort to try to absorb that migration. I think not a lot of people recognize that, especially Venezuelans in Venezuela, because it's a lot to absorb close to 2 million people in 6 month times, right? All of a sudden you have 6 new mouths to feed and then to give work or school or health. So it's been a huge effort, which now is very complicated with the fact of the COVID-19. Because the COVID-19 has made that a lot of those people who were working in the informal economy, which has basically been wiped out, at least for the time being, in Bogota, are now, walking, and I literally mean walking back to Venezuela, which is a completely different tragedy, because then Maduro takes advantage of that and puts them in, should call it refugee camps, not to call them prison camps, and all of that. Is the populism, which I think it was your question, moving to Colombia? Well, I think it's always been there. I think Colombia was protected from populism from the left because of the internal war between the left guerrillas and the government. With that uneasy peace that there is today, that excuse of not being anti-establishment has sort of disappeared, and there is I think, a fertile ground for some sort of leftist populist. But it's anybody's guess. It depends how this COVID-19 ends up. How does the President Duque finally takes care of that? It also has been affected, by the way, by the oil, even though Colombia is not a country which you mention in every, conference on oil. It depended a lot on oil, so the foreign exchange has suffered, and the production itself has suffered a lot. So it's a double whammy. So I would say that the impact of Venezuela and the COVID-19 is being very harsh for Colombia, but I think, contrary to Venezuela, has a lot of institutional strength that I think will allow them to cause this particular tragedy in better ways than other countries.
Well, I think as we move towards wrapping up, main thing we want to do is thank the three of you. I think we've done what we wanted to do, which is highlight a topic that nobody's talking about enough. And through the three of you, we've learned just how hard it is. So it certainly puts the rest of our problems in perspective. Just 5 or 10 seconds from each of you, what can the rest of us do to help the situation in Venezuela? How do we help?
Highlight it. I think what you're doing today, highlighting, because there are so many tragedies going on in the world that sometimes the ones that are at your doorstep are ignored.
Thank you. Pedro, what can we do?
Yeah, well, I think that in spite of oil tragedy now at this moment in Venezuela, this is and will continue being an oil-dependent economy. And the reconstruction of the oil industry is a must in the near future. Venezuela or the next government is not going to have enough resources. We are not going to have enough resources coming from new loans or international loans. It has to come from new investment of oil companies that come to Venezuela. And, the promotion of Venezuela, everything you can do in order to create a proper environment for those companies to be attracted to Venezuela will be a critical point in the future.
Okay. David?
I think that in the oil industry, you've already got partners involved that have plans and are willing to eventually make investments to recover oil output. One of the things that I worry about the most is that the only way you're going to get any sort of economic recovery and any output recovery in the oil industry is by guaranteeing that the natural gas sector and the power sector are also growing. And we're certainly seeing more challenges with power sector recovery. It's not as sexy as oil, maybe. It's not getting the attention of groups that could finance engineering studies to really be ready on day one to recover the sector. I see challenges there. So any sort of awareness that we can bring about in that regard, I think would be useful.
Well, I want to thank you guys again. I want to thank you, Joe, for helping us set this up. And Luis, we're going to take your advice. We're going to keep talking about Venezuela so people don't forget what's going on. We'll wrap up there. Thanks, everybody, and stay safe. Wear a mask. Be strong. We'll get through this. Bye.